Rupert, you and I have seen this before. You've seen it in public service to the United Kingdom, where there's an action in London, Governor Carney or Governor whoever does something, and it has an immediate effect in the markets. Can you ascribe Argentinian peso and Turkish lira weakness to what we're seeing in the United States? Do you, as a ex-public official, say rates higher in America, butterflies flap, and they get harmed in Turkey and Argentina?
Yeah, I definitely think there's a butterfly element to this. I think that it's really a combination of some idiosyncratic stories, particularly to Turkey, Argentina, we had a couple of others, aligning with this stronger dollar environment. And I think this is the big deal in markets at the moment. And so you put enough idiosyncratic emerging market stories together and it starts to look like a trend. And I think that it's, these countries were, able to survive in a benign environment with a weak dollar, support for carry. And then suddenly, when the national story turns down and the dollar environment turns around, you get investors running for the exit. And you just don't get so much for kind of forgiving attitude. So you're seeing that in Turkey. I think Argentina, Argentina has the tools available, I think, to deal with this. I think that they probably need to think about fiscal policy as well as monetary policy. I think they need more aggressive action from the central bank, but really they need to think about fiscal policy, and that's obviously very difficult for the government. In Turkey, this has been a negative view for us for some time. I think the politics are just much less conducive to getting on top of this because you've got elections, you've got a need from the government that they're actually stepping up the fiscal stimulus, very reluctant to do what it takes on monetary policy, and I think that is a situation that is going to get worse before it gets better.
I mean, I look at this, Rupert, and the basic idea, we've got jump conditions or ugly glide paths in some of these EM economies. Does that come back to jump conditions in the developed world, or can the elites keep control of the financial markets over the next 12 to 24 months?
Well, I think the overwhelming issue is this theme, which we've been talking about for a while, of U.S. outperformance. So, we've definitely seen slowing in the global economy outside the U.S., slowing in China, nothing catastrophic, but definite slowing in Europe. And the U.S. is this outlier with big fiscal stimulus, a central bank that is on this basically preset path for now, and where the kind of policy put the strike from that put is a long, long way away. So there's no real sense that the Fed is going to ride to the rescue anytime soon. The thing that has been keeping the dollar soft, I think, is global risk sentiment. Positive flows out of the U.S. Into emerging markets, into European assets. The fact that those are sort of coming back and that the sentiment around the rest of the world means that those forces lifting the dollar now, I think, in the ascendant. We've had some very key technical levels, so DXY through 200-day moving average, dollar, euro through 200-day moving average. And I think that for us, this is a big new theme in markets, and it's in those emerging markets that have sort of been the beneficiary of this benign environment, and now where you're seeing the flows reverse and the major vulnerability.